The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to Squawk Box Europe. I'm Steve Sedgwick and these are your headlines. China's Xi Jinping tells the French President Emmanuel Macron their countries must uphold relations as tougher EU trade rules loom over Macron's fourth state visit to Beijing. US stocks notch another day in the green as weaker than expected private payrolls data boosts rate cut expectations. And the US Treasury Secretary Scott Bessent says he expects the US to stick to its tariff agenda, regardless of a pending Supreme Court decision.
President Trump has been right on this, that he told me early on, he said, Scott, the United States is like a department store. Everyone wants to shop here, and only the United States can do what we're about to do.
So let's go back to basics on the markets before we get to this big geopolitical story with the French president in China as well. You know this sketch. Data is what it is. It's unambiguous. It's a fact when it comes out. But the reaction from the market is always the ambiguous bit. Is good data good news? Is good data bad news? Is bad data good news? And is bad data bad news? I think I've covered all the bases there as well. Well, unambiguously at the moment, given what we saw yesterday, certainly on the down with the financials, bad news is good news. And at other times, people have started worrying about the strength of the US economy when we've seen bad data. And as such, the market's fallen. Well, in yesterday's session, the private sector ADP numbers were bad news. No one wants to see less jobs created and jobs lost in the private sector being the great engine of growth for any economy. But the market rallied hard because it thinks now, as it thought beforehand, it's got a nailed-on rate cut on December 9th and December 10th. And I guess it's thereafter the path of rate cuts after what will be the third cut so far in 2025 that everyone's getting excited about. Very interesting noting, though, what led the market higher. Well, it was the likes of Amex, it was the likes of Wells Fargo, and it was the likes of Goldman Sachs. Which is interesting, isn't it? Because, OK, Amex, lower interest rates potentially, but quite frankly, are credit card rates divorced from what the Federal Reserve interest rate is anyway? I think you could make a very good argument that they are pretty divorced. But in terms of the financials rallying, well, I've had people on this channel arguing vociferously with me, oh no, rate cuts are bad for the financials because it lowers their net interest income and it lowers their net interest margin ability as well. So you can see how people are now taking the other side and just only looking at the glass half full. Anyway, that's what the markets did. Goldman Sachs rallying 2.6%, Citi up by 3.4%. So the French President Emmanuel Macron is in China this week, where he's meeting with his Chinese counterpart Xi Jinping. Macron is joined by top executives from French companies, including Airbus, BNP and Schneider, as he hopes to deepen commercial ties with Beijing. President Xi urged both countries to pursue an open dialogue.
China and France should demonstrate their sense of responsibility, uphold the banner of multilateralism, see through the fog of uncertainty, and firmly stand on the right side of history. China is ready to work with France, always bearing in mind the fundamental interests of our peoples and the long-term interests of the international community, to overcome various disturbances, adhere to dialogue on equal footing, and open cooperation. Ensure that the China-France comprehensive strategic partnership moves forward more steadily and effectively in the next 60 years.
Charlotte has more. Charlotte, I want to take a step back. And in the same way that I talked to a guest yesterday about the yada, yada, yada from politicians on either side of the Pacific, in the meantime, US-China trade flows still look very, very strong. And in the same vein, I know for a fact that Schneider has an incredible model where they actually have their own production sites in China and carry on business regardless of what is going on with the politics. And Airbus has, I think in Tianjin, it has a production facility as well. I must be honest, I don't know too much about BNP Paribas' activities in China, but I know that a lot of companies are just getting on with it regardless of what Xi and Macron talk about. What are the key issues, actually, that the two leaders are going to talk about or have talked about that are actually going to move the needle on real business rather than just the politics?
Yeah, we said these businesses are getting on with it. At the same time, they know their businesses are impacted. Look, you mentioned Airbus. Airbus, we know big orders are in the balance because in the China-US trade negotiations, big orders of Boeing planes are potentially there as well as an element to, get some benefits in that relationship. So, all of this is in the balance in that relationship. But again, it's a relationship that Macron has been very much prioritizing and nurturing over the past few years. His fourth state visit, as you were saying, President Xi himself was in France last year. Macron took him to his grandmother's hometown in the Pyrenees. So, they are trying to put on the surface an image of union and relationship. And it was interesting to hear both of them this morning talking about the need to defend multilateralism. And again, President Macron talking about the disintegration of the international order, and that even though there are divergence of views on many aspects between the two countries, how they both need to overcome them in order to defend multilateralism. And that's an interesting thing here because, it's a balancing act for President Macron about the economic and security threats that China represents for Europe, and at the same time, the reliance of Europe on China. So he's trying to strike that balance there. Of course, remember, France was instrumental, for example, in putting tariffs on Chinese EVs in Europe. And China, in retaliation, put tariffs on cognac. So, they have to work this line on trying to work together at the same time, knowing the threats that potentially are there. Also, Europe worried of being a collateral damage in the tensions between China and the US. All the cheap Chinese goods coming into Europe, for example, still being impacted in Europe. So he has to work on all these aspects. And it is complicated, but here again, trying to work on it at the moment. Very interesting to hear before the trip happened, the Elysee talking about technological transfers that need to happen from China to Europe, that for many years Europe benefited of these tech transfers from Europe to China, but it's time to see it happening the other way around. So, there is a very deep change in the dynamic between the two countries. But here again, the geopolitical context being important. We know that the peace deal for Ukraine that has been presented by President Trump, Beijing often accused by Europe of fueling Putin's war machine. So, President Macron will be pushing on that front, and the issue of Taiwan with high tensions between Japan and China at the moment around the topic. Last time President Macron was in China in 2023, he made some comments that caused a bit of a stir, saying, putting in question the support of Europe, of France for Taiwan in case of action from China. So all this context playing together. But here again, because of the tensions with the US, Beijing is kind of pitching itself as a reliable trade partner. And that's kind of what we heard this morning from the two presidents.
Bilateral, very important though, but how much is the key person here von der Leyen or Mara Sefcovic, who obviously runs trade policy for the EU as well? Obviously, the French have an asymmetric influence rather than the other 26 nations in the EU as well. But is the key battle to be had with the Commission or indeed with France?
Well, that's really interesting because in his last trip to China, President Macron had Ursula von der Leyen with him, talking about France's message is Europe's message. This time, Ursula von der Leyen is not traveling with President Macron. She was in July in China. It was a tense trip. We know that she talked about an inflection point in the relations between Europe and China. So interesting to see that Macron may be trying to not distance himself, but maybe do things his own way this time around and try to separate the negotiations.
Hang on, but that would be then bilateral but not multilateral. Because if anything, the EU having control over trade policy is a multilateral approach to having trade policy.
President Macron always said that what benefits France
it?
benefits Europe, what benefits Europe benefits France. So his message has always been very clear on that front. Very last thing, very interestingly, there are rumors that President Macron might invite Xi Jinping to the G7 next year. France is chairing the G7. The leaders' meeting will be in Evian in the summer, and there are some rumors that maybe he's trying to invite Xi Jinping to that meeting. There are some reluctance from the Japanese in particular at the moment. The Germans are thinking about it, potentially on board with the idea. But it'll be, again, an interesting dynamic if that was happening.
Question for you. Will it be G7 by then?
Well, there's the thing.
Because having been to a lot of these meetings over the year, and I was at Lochern, I believe it was, in Northern Ireland, which was the last time it was G8. Obviously, one of Trump's initiatives is to get Russia back into a G8. So that would be fascinating if the Russians and the Chinese are there.
Yeah, absolutely.
Amazing. Lovely coverage. Thank you very much indeed. Moving on with foreign policy still, China's Foreign Minister Wang Yi urged France to support China's position on Japan. It comes after the Japanese Prime Minister said a potential Chinese attack on Taiwan could trigger a response from Tokyo. Wang told his French counterpart that China and France should enhance communication and cooperation. The Taiwanese president, Lai Ching-te, has told this very channel the country was working on securing peace.
We believe that peace is priceless and war has no winners. While we aspire to peace, we cannot harbor illusions about it. Peace must be secured through strength. This is why we are increasing our defense budget and strengthening our national defense capabilities, while also cutting back our economic dependence on China. This includes improving our economic resilience. In 2010, 83.8% of Taiwan's outbound investment went to China. Last year, that figure had dropped to around 7%. We are also working side by side with other democracies to reinforce deterrence. Robust preparations are the best way to avoid war and achieve peace.
OK, I mentioned it at the top of the show, but why don't we go into a little bit more detail on the private payrolls, which in the United States notched their biggest drop in more than 2.5 years in November, down 32,000, led primarily by small business layoffs, according to ADP. Although some economists have pointed out that this diverges from the government's own data. Economists polled by Reuters had penciled in a 10,000 uptick in jobs. The US Bureau of Labor Statistics will release its own employment report for November on December 16th. Why is that date important? Well, let me just remind you, the Federal Reserve meets on the 9th and 10th. The jobs figures on the 16th, so they won't have the latest data in front of them when they make that decision. Well, speaking to CNBC after the report, Commerce Secretary Howard Lutnick said he expects a marked uptick in construction jobs and GDP growth next year.
Next year, the numbers are going to be fantastic. I think because the jobs of building in America, you know, as President Trump talks about the huge construction projects coming to America, I think you're going to see GDP next year superb, over 4%.
OK, quick look at the US markets. I haven't mentioned them at the top of the hour. The markets like what they saw, especially the financials. Goldman Sachs, I think Goldman's, let me have a look, was responsible for a vast amount of the US incline. I think it was about 100 odd points of that as well. In fact, it was 131 points was Goldman Sachs in the Dow. There you can see the two major banks there, JP Morgan and Goldman's, up 1.3 and 2.6 respectively. Citi and Wells also up to the tune of 3.5%. European futures look like this. Let's take a look. Again, mildly positive start. In fact, not mildly, a solid start to trading if you are long the market. Meanwhile, Bitcoin is holding above the 93,000 level after that bruising sell-off earlier this week. Well, the BlackRock CEO Larry Fink gave his thoughts on the sector.
We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. Right. That's fine. And they're establishing a longer position.
That's interesting. Legitimate long-only players getting involved in that. Very interesting from Mr. Fink there. Well, the crypto selling came on the tail end of a broader move out of risk assets, which part of which was spurred by AI jitters. Dario Amodei, who is the CEO of Anthropic, which is reportedly seeking a private funding round that would value it at around $300 billion in a stepping stone to going public, gave his take on valuations in the sector.
So this is really complicated, and I want to separate out the technological side of it from the economic side of it. On the technological side of it, I feel really solid. I think I'm one of the most bullish people around, and I think it pencils out. On the economic side, you know, I have my concerns where even if the technology is really powerful and fulfills all its promises, I think there may be players in the ecosystem who, if they just make a timing error, if they just get it off by a little bit, bad things could happen.
Coming up on the show, we are live from Estonia's border with Russia as the EU tries to reduce its dependence on external parties for critical minerals. Plus, US Treasury Secretary Scott Bessent talks tariffs, inflation and the Fed at the Deal Book Summit in New York. We'll bring you his comments. And Watches of Switzerland reiterates its full-year guidance and says it is well placed as we enter the holiday period. We'll speak to the CEO, Brian Duffy, 7:30 London time. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. How many times have I said the following? The European Commission has presented a plan. Well, let's just see if this one works, because they presented a plan to use 90 billion euros of frozen Russian assets. I think there's more than that frozen. Isn't it about 300 billion or something? Anyway, they've presented a plan to use 90 billion of those to help fund Ukraine over the next 2 years. The proposal, which includes the option of international borrowing, was rejected by Belgium. You know this because that's where they hold the bulk of the assets, and which has insisted the plan poses a major financial and legal risk to the country. Sylvia, for a start, the frozen assets is way bigger than 90 billion.
Yes, I can explain the figure in a moment.
Okay, explain the figure.
So it's 90 billion for a period of 2 years.
Right.
So there's more, you're right. We're talking about almost 300 billion that are indeed frozen at the moment. But what the European Commission is saying is that we are going to use, for the time being, only 90 billion for the next 2 years to support Ukraine. That doesn't cover all the financing needs, but it's just what the Commission decided to put forward at this stage.
I can see a flaw in this plan immediately. And I'm pretty sure as part of, I don't know, we are down to 27 bullet points or 28 bullet points between Putin and Trump at the moment. I'm pretty sure that part of that plan was you hand back those frozen assets.
You're right. And there's so many angles we could take with this story because there's so many issues here, actually. So I'll try to explain it as best as I can. Because
which is pretty good enough for me, that's for sure.
I'll do my best. So what the European Commission said yesterday was, okay, we need to support Ukraine with further financing. What we're suggested to do is to use the so-called frozen Russian assets that are held on the European continent. So what the Commission is trying to do here is to try to use the assets that are available across the bloc, not just in Belgium. Because we know Belgium, where the majority of the assets are held, has had very strong legal concerns about this problem. But even before the Commission put forward this proposal, Belgium was already saying they had issues with it. We heard, for instance, from the Foreign Affairs Minister, Maxime Prévost, saying that they were going to plead for alternatives here. And indeed, they believe that EU borrowing is the best option rather than using the frozen Russian assets. What the European Commission also suggested yesterday was if we don't go down the route of using the frozen Russian assets, we can indeed go to the markets and actually borrow cash to support Ukraine. But that is actually even more complicated from a European perspective, because in order to do so, you would need all of the member states, all of the 27, to say yes to that plan. And we know countries such as Hungary are likely to raise issues with that. So one EU official told me yesterday that by putting forward two proposals, what the European Commission is trying to do here is to show to the member states that the most viable option is still to go down the route of the frozen Russian assets. And here's the President of the European Commission, Ursula von der Leyen, explaining that.
We have listened very carefully to Belgium's concerns, and we have taken almost all of them into account in our proposal that is today on the table of the reparations loans. We have very strong safeguards in place to protect member states and to reduce the risks as much as possible.
So the European Commission believes that it has done enough, that this proposal will be enough to please Belgium and other countries. But we know that that's not the case. As I highlighted, Belgium already raised criticisms against this idea. However, the Prime Minister of Belgium also highlighted that they still have 14 days to find a solution before that European summit when they are supposed to agree on new funding for Ukraine. And the Prime Minister said, 14 days is an eternity. in politics. So let's see how the next couple of days will unfold, Steve, and whether they will manage to find an agreement. But at this stage, it is very uncertain how the EU is going to help Ukraine financially.
We've got another correspondent waiting. I'll just ask you one quick question, and if you can give me a very short answer. I'm sorry, why doesn't the EU just indemnify Belgium? Just like, bing, done. Then all Belgium's concerns are gone, i.e. make it an EU problem rather than the Belgian problem. Boom, concerns go away. They can give them as much money as they like.
The Commission says that's what they're doing. That this proposal is clearly stating that this is a problem for the bloc, that there will be national guarantees.
We were talking about this, I think, last year.
We've been talking about this for a very long time.
Why didn't they indemnify them a year or so ago and make sure those funds are available? I'm sorry, it just sounds so EU.
I'll try to pose that question to my sources and see if I get something new
your
for
sources
you.
Are very good as well. Thank you very much. See you a bit later.
Steve.
Thanks for coming on. The European Union has announced an almost €3 billion plan to support purchases and stockpiling of rare earths and projects across the industry. The move comes as the bloc looks to reduce its dependence on China, with the EU's executive arm also pledging tougher economic policies on trading partners to secure sources of critical raw materials. Sam Meredith travelled to Europe's largest rare earths factory in Estonia and filed this report.
Europe is scrambling to secure access to critical raw materials. I'm here in Narva, Estonia, at a rare earths magnet factory on the Russian border that's working to reduce the bloc's dependence on China. Rare earth elements are essential for many modern technologies, from EVs and semiconductors to fighter jets. China is the undisputed supply chain leader, responsible for nearly 60% of the world's rare earths mining and more than 90% of the magnet manufacturing. And recent geopolitical tensions have thrown these once obscure raw materials to the top of the political agenda. This facility, run by Canadian group Neo Performance Materials, is the largest of its kind in Europe. It aims to create an alternative supply chain that doesn't run through Beijing. But just how much of a role can it play in Europe's push?
The market is enormous and it's growing at a tremendous rate, right? So globally, the market is 250,000 tons going to 600,000 tons, so more than doubling in 10 years. And more importantly, our concentration is 93% in a single jurisdiction. So when you put those two factors together, I think you'll find an enormously quick growing market. The European importation of these magnets is about 25,000 tons a year. So we'll start at 2, we'll go to 5, and then we'll do more thousands of tons after that. But I mean, a 2,000-ton facility is $150 to $200 million in revenue, depending on where rare earth prices are.
Neo's factory could be a huge opportunity, but it also shines an uncomfortable light on the scale of Europe's challenge.
There still remains quite a large gap between supply and demand that companies like Neo and others need to come forward and announce that next wave of capacity and the wave thereafter if Europe is really to move towards minimizing its reliance on China.
Rare earths and critical minerals have been caught in the US and China's trade crosshairs. European leaders and businesses have been reacting with the rapid deployment of factories like Neo. But building out a made-in-EU rare earth supply chain is a long and by no means easy road ahead.
Sam, brilliant report. I loved it, and loving the hard hat and the high vis as well. You rock it far better than I could ever do. But Sam, I don't mean to be pedantic, but if you are looking to secure and have safe sources of rare earths, why would you do it essentially right next to the Russian border in a part of the EU which is the most concerning in terms of the eastern flank?
Hi, good morning, Steve. Yeah, it's a good question. I actually put it to Neo's CEO when I spoke to him recently, and he was suggesting that they're not concerned. Estonia is a NATO member, it's a European Union member, and they also already have an infrastructure presence here. They actually have a facility, I think it's about a 30-minute drive. We came through it on the way to visit, actually. So given that presence, given the security aspect of being, as I say, a NATO member, a European Union member, they say that they're very happy to exist here. But let me take you through a little bit of what it is that's going on in this facility. As I say, it's a highly strategic one. It's Europe's largest rare earth magnet factory, and it's a highly complex, highly technical process. But what I've got here is what you get kind of at the beginning of the process. These are rare earth elements that look a little bit like kind of alloyed cornflakes or jigsaw puzzle pieces. And then through some crushing and grinding and pressurizing, you get something a bit like this, a kind of glossy magnet block, which is critical to the function of modern technology. So electric vehicles, defense, AI applications, wind turbines, the list goes on from there. And part of our reason for coming here is the Resource EU initiative that you mentioned earlier. This is a push to mobilise about 3 billion euros or $3.5 billion over the next 12 months to support these raw materials projects. The response to this has been decidedly mixed. There are those that see it as a major step in the right direction, some cautious optimism about what's been announced, to those who fear it's simply a rebranding exercise, and actually there's much more that needs to be done. Ultimately, for the EU, actually escaping China's mineral orbit remains a massive challenge. Back to you, Steve.
Yeah, Sam, just a quick follow-up as well. One of the big problems that people who are trying to create new plant and facilities such as the one you're at in Estonia is they say it's the rules and regulations, the permits and the regulations and the NIMBYism throughout Europe as well, and dare I say it, throughout the broader West as well. Do we think now there's a more realistic attitude to that across the EU?
Yeah, it's a good point. It's hard to say for across the EU. I know that for this presence that they have here in Narva, they're currently looking to produce around 2,000 metric tons of rare earth magnets. They're looking to kick that up to about 5,000 very soon. This project's looking to more than double in size. They've got oceans of room to move into to do that. So the NIMBYism doesn't seem to be so much of a problem here. Part of the reason actually they're in Estonia as well is for this kind of fast track permitting aspect as well. So they've been able to kind of ramp up in its size.
Yeah. Brilliant work, Sam. Thank you very much indeed for that. Yeah, we're only a quarter of a century behind the Chinese now in the West, but looks like we're getting there. Thank you very much indeed for that, Sam. Loving the outfit. For more on how the EU it's a great piece, actually, I have to say, and Sam's a brilliant writer. So have a look at his piece on CNBC.com as well on how the EU is looking to reduce its critical mineral dependence on China. Check out CNBC.com where you can find Sam's article. Right, let's take a quick look at the European futures to break. As we saw about 30 minutes ago, they look really positive if you are long the market. I always say that because some of you are short and want it to go down. 97.42 is where the FTSE is called to start trading.